Welcome, everyone. Thank you for joining us in our discussion about the challenges posed by widespread informality in emerging market and developing economies. In these economies, as we all know, large numbers of people and small enterprises work outside of the government's line of sight, which means it is also much harder to get help to them in a crisis like the one we are going through. I am Pangestu, Managing Director at the World Bank Group. Today, I'm joined by three distinguished panelists. Ceyla Pazarbasioglu is Director of Strategy, Policy and Review Department at International Monetary Fund. She leads the work on strategic direction and the design and implementation and evaluation of fund policies. As it happens, she also supported this study that we are launching today during her tenure here as the bank's FE Vice President. The second speaker is Brahima Coulibaly, who is the Vice President and Director of the Global Economy and Development Programs at Brookings. He joined the Brookings Institution from the Board of Governors of the Federal Reserve System, where he was head of the Emerging Market and Developing Economies Group. Cole, I know that you have friends in the Prospects Group, and I know that you have been a big promoter of our work at Brookings. I'm very thankful for our collaboration with Brookings. And Ferid Belhaj is Vice President for Middle East and North Africa at the World Bank Group. This region hosts some of the countries that face particularly severe challenges for informality. We look forward to hearing from him about some of the policy challenges and broader operational issues on the ground. Thank you for being with us today, Ceyla, Kul, and Ferid. We have a large audience from across the world via Facebook, YouTube, and the World Bank Live. Please do post your questions online, and we will respond towards the end of the session. Today, we publish our new study, The Long Shadow of Informality, Challenges and Policies. This study was the culmination of 2 years of analysis of a team working with the book's editors, Francesca Onzorge and Zhu Yu in the Prospects Group. It is really an amazing body of knowledge and data. I was just told that this is going to be the largest database on the informal sector, and it will be made widely available. You can find this study at www.worldbank.org/informal-economy. The key takeaways that come from this study is that policy challenges due to widespread informal activity actually existed before the pandemic, as we know, but informality now threatens to hold back the recovery. The informal economy accounts for 1/3 of GDP and 70% of employment in an average emerging market and developing economy. Those in the informal economy have been hit particularly hard by the pandemic because they are concentrated in the services sector, and informal workers were more likely to lose their jobs or suffer severe income losses during the lockdown. And informal workers are also largely excluded from formal social safety nets. Female workers make up a disproportionate share of workers in the informal sector. In the emerging markets with above median employment informality, 87% of employed women work in the informal sector. The study provides several reasons to expect the recovery from last year's severe recession to be held back in emerging market and developing economies with large informal sectors. These countries struggle to muster the fiscal resources to support economic activity, and they will struggle to implement effective monetary policy in a shallow financial system. And they will struggle to generate income growth and jobs in the aftermath of the crisis. Historically, informal economy output, and therefore the incomes, have fluctuated with formal economy output, but in a more muted fashion. And this muted response dampens the income collapses during recessions, but it also holds back recoveries. Finally, informal employment has historically been largely unresponsive to formal economy business cycles. This suggests that increases in informal employment resulting from COVID-19 crisis are likely to persist well into the formal economy recovery. with those main takeaways of the study, let's get started with our discussion. We'll first discuss how informality will affect recovery. So let me start with you, Ceyla. Ceyla, you've been through several crises and worked with authorities to support their economic recoveries. Will we see recovery being slower and more fragile in economies with more pervasive informality? Over to you, Ceyla.
Thank you very much, Marie, and it's really a pleasure to be part of this panel with colleagues, and also this is a very good opportunity to talk about the book, which is excellent and very timely, as the title of the book is The Long Shadow of Informality, Challenges and Policies, and this shadow, unfortunately, has become much longer given the pandemic. And the key message from the book is, as you said, the degree of informality is high in many emerging market developing economies, and it will hold back the recovery from the pandemic unless policy action is taken. And I think this is the key message in my view, that there is a need to take policy action both at the macro level and at the micro level. So there are three reasons why this will hold back recovery, which was your question to me. One is that many of these countries, and this is across the board for low-income emerging market economies, they face uneven access to vaccines. Most of these countries rely almost entirely on multilateral COVAX facility, and COVAX is currently set to procure vaccines for just 20% of the population in many of these countries. So that's a big constraint, in addition to many issues that you mentioned in these countries. Second, they had very limited policy space to respond to the crisis, and countries with high levels of informality found it even more challenging to ensure that policy support in response to COVID-19 reached the most vulnerable and hard-hit segments of the population. Part of it is precisely because they're in the informal sector, not documented, not much data, and also they are not part of the social safety net. So in many countries, we have seen efforts to address this, and I'll come back to that in a minute. And the third issue, which you again mentioned, and the book has a very good chapter on this, is basically the pre-existing vulnerabilities in these countries: high levels of public debt, weak factor productivity performance, as well as, of course, much lower government revenues and therefore public service to many parts of the society. So what we have released our World Economic Outlook during the spring meetings, and we have seen that there will be a much wider gap in living standards across countries compared to pre-pandemic, and the average annual loss in per capita GDP over 2020-24 relative to pre-pandemic forecasts is projected to be about 5.7% in low-income countries, and even higher in countries where informality is dominant. This compares to 2.3% in advanced economies. So because of young, lower skilled workers and women who are very much working in the informal sector, unfortunately, these countries will be much more heavily affected. And something that the World Bank has written about this is, of course, going to reverse gains, unfortunately, in poverty reduction, adding more than 95 million people to extreme poor status in 2020 compared to pre-pandemic projections. We have, there are financing needs. There are, of course, countries can do things by, reforms and so on and so forth. But we as the international community can also support this through a coordinated, multifaceted, and strong response to make sure that actually this support goes to those that are most impacted and not covered by the formal social safety net. And happy to discuss this further as we in the rest of the panel.
Thanks, Ceyla, for providing us really with a broad picture of this general question about how informality will affect recovery. Cool, I would like to ask you, given your work on transmission of international shocks, with the informal sector being concentrated in non-tradable sectors and with limited access to credit, does that imply that the international spillover effect recovery will be more limited in economies with more pervasive informality? And therefore, do we expect to see little improvement in informal economic activity, even as we see national and global economic recovery? Over to you, Paul.
Yeah, thank you, Mary. The World Bank for the invitation, and Ceyla and Ferid, it's good to be on this panel with you. Let me also begin by congratulating Mary Ayan and the Prospects Group for this excellent and comprehensive study on a very important but yet very difficult subject. It is indeed timely, and I think it will help policymakers better understand the informal sector and integrate its understanding into their policy design as they proceed on the post-COVID reconstruction efforts. The spillovers of the global economy usually tend to be greatest when you have business cycles that are not synchronized. And I think spillovers can obviously be positive or negative. But looking at the current state of the global economy, I think the recovery seems to be proceeding, at least so far, on two tracks. I think last time we had this pattern was in the immediate aftermath of the global financial crisis, but then emerging markets were recovering much faster. But this time you have countries like China and the US that are recovering faster and set to recoup most, if not all, of its COVID-related GDP loss. So as the two largest economies, this could obviously generate some positive spillovers to several EMDEs that are lagging behind in the recovery, particularly those that export a lot to China and the US. But I want to also flag that there is a risk that the recovery in the US, for example, may really outrun others on the back of the stimulus and greater confidence in the vaccine deployment. But that could also push up inflationary pressures and global interest rates and trigger capital outflows out of EMDEs. This would obviously raise the cost of capital and make the recovery for those lagging behind even more difficult. So I think what it does, it then underscores the urgency to assist as much as possible these economies so that we get more quickly to a more synchronized recovery. In terms of how those spillovers could affect the domestic economies, what our study had documented is those with the weaker fundamentals, particularly large current account deficit not financed by sustainable sources such as FDI, or countries with insufficient foreign exchange reserves to cover short-term external liabilities will be most vulnerable, as was the case, say, during the taper tantrum. I think the question then is that you raise is how does the size of the informal sector itself affect the exposure of these countries to the spillovers, both the positive and negative. If you'd asked me this question before I read this study, I would have felt less equipped to answer the question, but I think the study does a good job at providing us with the analytical tool to answer this question. It's one of the key contributions was to document the co-movement between the formal and informal sector, although the latter tends to move a little bit less than one-to-one with the former. And those global spillovers, I think, will primarily operate through the formal sector. And given that much of the informal sector is indeed, as you mentioned, non-tradable and with limited access to formal credit. Similarly, there's also domestic policy responses to counter the spillovers. Those also tend to operate through the formal channels of the domestic economy. So as such, I think the larger the informal sector, the more likely the impact of those global spillovers, positive or negative, will be relatively muted. And I think that's consistent with what we've seen from many developing countries, where informality is pervasive. When we were in the global financial crisis, the spillovers to them was much more limited. And I think there's some good news and bad news. The good news for economies with large informal sector if they are dealing with the negative spillovers, but not so much if they are in the positive, dealing with the positive spillovers. But again, I think it's important to assist them very quickly so that they can benefit as much as possible for this current recovery that is being led by US and China. And then we're not in a scenario where we have to deal with the negative spillovers.
Thank you, Cole, for putting the informality in the wider context of the weaknesses of recovery that developing countries will face. Now let me turn to Ferid from a view from the ground. Informality, we know, is a recurrent issue in Middle East and North Africa, especially in non-GCC countries and fragile states. So in your view, how will informality affect recovery in the region? And are you seeing the formal sector recovering faster than the informal sector? Over to you, Ferid.
Yeah, thank you. Thank you very much, Marie. And it's a pleasure to be with all of you, and of course with Ceyla. Very good to see you again, and Ayhan and the whole team. Thank you very much to Francesca and Shu, not only for the reports, but also for what it contains in terms of data. As far as I just learned, this is the largest data set on informality that we've ever seen. That's important because in MENA, if there is one thing that is really hampering our analytics, it's precisely the dire need for more data, and we don't have that as available as we should. So thank you so very much. Good that you are mentioning that I'll be bringing the view from the ground. 10 years ago, slightly more, in December 2010, the spark that inflamed the whole region started in Tunisia by an informal vendor, somebody sitting on the street who was harassed by the police and who set himself ablaze, and that really transformed the whole region. So informality, started a huge revolution in the whole region. Informality is playing a very, very, very important role in our countries. You have the kind of almost legal informality, and then the unlawful informality, because unfortunately, when you look at the state or the strength of the state in our region, there is a level of delinquescence there, and that favors informality in all of its shades of colors, in a way. And so we have informality that is really bringing unlawful activities, but we also have the informality that we are all talking about here, and that is a result of the fact that the role of the state in the economy is huge. There is not enough place for the private sector. There is not enough contestability. So people try to find ways to make a living through informality. The size, as I mentioned earlier, because of the difficulty to get data, is very difficult to determine. But just a quick number. When it comes to Egypt, for instance, so we know that between in 2017, 2018, we calculated that 60% of the workers in Egypt are informally employed, which is obviously a huge number to be taken into consideration when politicians, when policymakers, think about how to engage with their own people, how to manage this famous or infamous social contract that we have been trying to change when it comes to the Middle East and North Africa region. The lack of trust between the state and the citizen, the huge role of the state in the economy, the fact that, unfortunately, that leads to lack of governance, lack of opportunity, and leads to corruption. This configuration here, of course, is not necessarily promising. So what is the way forward? I guess Ceyla mentioned it very clearly. There's a need to engage in new policies, need to engage into policies that we have been advocating for years that would bring about a more, a market that would be more geared toward contestability, toward the possibility for new entrants into the market to have their fair share and of opportunities. Now, when one asks, what would come first in terms of recovery? Is the formal sector going to be recovering faster than the informal sector? frankly, it's a big question mark. And again, as Ceyla mentioned earlier, the issue of vaccination is important, obviously. The issue of adopting new policies is very important. In the meantime, we are adopting what I term as a two-pronged approach, managing the immediacy of the threat, I would say. Trying to make sure that populations do not fall into extreme poverty, and by that, and for that we have expanded and rolled over the whole region social safety net projects, cash transfers, building on a number of activities we have led over the years in terms of determining or targeting, the population and making sure that subsidies would go where they should be going. So we are doing that, but at the same time, we need to be, how shall I put it, realistic and pragmatic. The informal sector shall be an important transition phase for the MENA countries as they recover slowly from the pandemic. Again, provided that governments focus on improving the formal private sector and improving the policies that would lead that formal private sector to thrive in a sustainable way. As you can see, many question marks and many issues ahead of us.
Thanks a lot, Ferid. I think you emphasize a lot of things, but I think the issue of data is very important that you highlighted. Data is needed so that the unseen are seen and how we can shorten the shadow. And thank you for sharing the view from the ground. For those of you joining us just now, welcome to this broadcast. I'm here with Ceyla Pazarbasioglu, Brahima Coulibaly, and Ferid Belhaj. And we are talking about the implications of informality as the global economy recovers, and also how we can move onto a green, resilient, and inclusive development path. So let's now broaden the discussion to the longer-term development challenges posed by informality. Cole, this time let me start with you. The global economy needs to achieve a green, resilient, and inclusive development so that we can deliver on the SDGs. Do you think that the informal sector will threaten the achievement of the SDGs? And what are the long-term development challenges associated with informality?
Yes, I think the book documents, and I agree that the countries that have the larger informal sectors tend to score a bit poorly on the development indicators, including the target for the SDGs. They have access to less access to formal credit and rely more on internal resources or informal sources of credit. I think the workers in the informal sector also tend to be less productive, but we know that sustained labor productivity is the key ingredient for long-term economic development and structural transformation. But what is less clear is whether the informal sector is creating the development challenges or whether it is the lack of development opportunities, the lack of formal sector opportunities that is creating informality as an alternative to sustain the livelihood. I think the study was careful not to draw any causal linkage between informality and development, and I think that's the right approach in my view. Development challenges foster informality, and informality also creates those challenges. So what does history tell us? So if you look at historically, the share of informality in cities has declined as economies develop. But I don't think some of these policies started out with the primary objective to reduce informality and then to have development follow. Instead, they're set to create formal economic opportunities to undertake reform to foster more conducive environments for that organically delivers on development and help reduce then therefore informality. In that regard, there's a global trend that I find particularly concerning, thinking about the longer term. It is increasingly difficult for countries, developing countries in particular, to create large-scale formal sector jobs. A large part of this is due to the premature deindustrialization. For example, if you look back in history, when Western Europe was industrializing, industry could absorb up to 35% of labor. But currently, a developing country would be lucky if they are able to absorb 10 to 15% of the labor. And that's because production has become more capital intensive. So the consequence then of lack of job opportunities in the formal sector is that you see labor migrating out of agriculture, but going directly into informal services and bypassing then the industrial sector. So this is an unprecedented pattern. Because these informal services where they end up are not more productive than agriculture, the migration is not accompanied by an overall increase in productivity that is necessary to achieve long-term structural transformation and economic development. So this is just an example of a global trend that is affecting both development opportunities in the context of entrenched informality, which now is really a symptom rather than a cause. So I think then the policies to address informality need to be really integrated and viewed in the broader context of the development agenda.
Thank you, Cole. I think your point is very important. Increasing formal economic opportunities, and it's not just if it's going to informal services. I think apart from the industrial sector, I think the whole question about modern services that can actually provide opportunities both for informal and formal workers can also have development outcomes. Ferid, informality is associated with slower and physical and human capital accumulation, and the COVID-19 obviously has severely disrupted both. Do you think that informality will deepen the long-term damage of the pandemic in emerging and developing economies in MENA?
Yes, when it comes to MENA, unfortunately, the risk of scarring effects is extremely important. When I look at our countries, put aside the GCC, all of these countries have a very difficult time finding enough resources to bring about an economic stimulus. Money is simply not there. So how can they relaunch their economy and obviously favor more of a broadening of their own private sector? It is going to be very difficult. We are trying to help in any way we can. The fund is trying to help in any way they can. So an expanding informal sector resulting from this pandemic will clearly have an adverse effect on the productivity, on innovation, and will clearly bring down the overall prospects for the region. And this is where, again, going back to my first point, there is a need for all of us to help our countries bring about a new set of policies that would allow them to open up more the scope for a unhindered private sector. What I see in almost all the countries, I look at Morocco today, I look at Tunisia, I'm looking at what's happening in places even like Egypt, that is doing relatively okay. Even in those countries, because of the lack of really strong and bold policies to open up the private sector, we find ourselves faced with lower wages and lower opportunities for economic recovery, and unfortunately an expanded set of incentives for the informal sector to thrive. And this is something that, again, as I mentioned earlier, we are trying to work with. It is very difficult as long as countries don't take those policies seriously, and all of us, G7, IMF, the bank, are not in a situation where they can pour very important resources to stimulate those economies.
Thank you, Ferid. Let me now turn to Ceyla on the fiscal response and relationship to informality. I think we can see that the fiscal response has been unprecedented. And in emerging markets, this may limit the short-term economic damage from the pandemic. But what's the outlook for emerging market and developing economies with large informal sectors? How do you see the interactions between fiscal resources and the informal sector?
Yeah, this is a very important question, and as you mentioned, informality is very high, and the book provides excellent information on this. And as Ferid said, you can't do much unless you measure, so it's very important for policy making. And you know, informality is about 1/4 to 1/3 of the economy in many emerging markets and developing economies, and much higher in some countries like Brazil, Peru. The numbers go up to 70, and in some African countries, numbers are over 80% of the economy. So it is very high. And you mentioned the unprecedented fiscal support, but that's very uneven. We have been talking about divergent responses to this crisis and divergent recovery from this crisis. Advanced economies basically did whatever it takes. They spent 23% of GDP on average to deal with the human and social and economic impact of the crisis. For emerging markets, that number goes down to 6%. For low-income countries, they could do whatever they can with some of our support, meaning from IFIs, 2% of GDP. So, you know, they were not really able to address this crisis. And if you look at the government revenues in emerging market and developing economies with above average informality, their revenues are 5 to 10 percentage points of GDP below those that are in other emerging market and developing economies. So of course are their expenditures, and that's really restrictive in terms of their ability to have support packages that can help these countries bring the pandemic under control and generate robust recovery. So as Ferid said, yes, it's all efforts are needed to support them. But you know, we have to be cognizant that what this meant was much less social spending during and unfortunately now and in the aftermath of COVID-19. Some countries' policymakers expanded the coverage of social assistance to include informal workers. This was the case in Dominican Republic and Peru, and there are potential lessons for other countries as well. But I want to go beyond the immediate crisis, where we do need structural reforms and measures to broaden the reach of social safety nets, to reduce informality, and allow more people to benefit from better wages and redistributive measures. This will, of course, vary country by country, but these priorities include reducing regulatory and administrative burdens, promoting transparency, improving government effectiveness, improving tax compliance, automating procedures, promoting electronic payments, and so on, some of which are discussed in the book. But this sounds very much like a broken record. We have been saying this advice over many years, but I do think there is an important opportunity to, with advances in digital technology, and basically this is establishing citizen identification systems, integrating these with public socioeconomic information databases, and improving benefit delivery mechanisms. So this could be a reliable ID system, financial inclusion, and making the benefit delivery much more broadly available using mobile forms of delivery, as some countries have done, some low-income and emerging market countries have done. Mm-hmm. Finally, I think we need to do more to increase the productivity of the informal firms and workers, because I think it will take time to bring people to formality, and we have here much less to guide us, because we have always been talking about how to bring the informal to the formal sector, and much less about how do we allow the informal sector to be more productive. And I think here too, with the digitalization, automation, we will see many jobs unlikely to return, and this will require worker allocation across sectors. which unfortunately comes with severe earnings penalties. So we need to be innovative with active labor market policies to retrain workers, some out-of-the-box thinking as to make sure that digital technologies are guided so that they don't just replace workers but enhance them, and use digital financial services to provide low-cost financing to all workers, including the informal workers.
Thanks a lot, Ceyla. I think you actually have provided a good segue for the last segment of this panel discussion. I think we have about 5 or 6 minutes left. And it's just really about what can policy makers do to seize opportunities and address the challenges. And so let me start with Ferid and ask you about the nature of informality, which is quite different in MENA. And in the region, informality provides employment opportunities where the formal sector suffers from severe distortions in governance. And what policy priorities do you see for addressing the challenges posed by informality in the Middle East and North Africa?
So thank you. Look, 3 points I would make briefly. One, as I mentioned earlier, we need to improve social protection and labor market policies. That was said clearly by Ceyla. Informality will persist. You know, this is part and parcel, unfortunately, of the DNA of MENA. Has been there forever. I don't see it going away anytime soon. So we need to make sure that we protect and support the population in the informal sector, notably at this time of dire need. Second, we need to have a holistic view of the labor market, because it is going to be very difficult, frankly, to separate the formal from the informal in our countries. They are very much together, and we need to make sure that we don't adopt a separate sets of measures. And third, and this is really the broken record, moving away from the public sector. MENA needs to strengthen conditions for more job creation. So we need to level the playing field. This is the issue of contestability that we've been talking about forever. In each one of the countries, even those who are doing quite okay, like Morocco, for instance, there is a rentier economy that is still very much prevailing. We need to make sure that we improve transparency and governance and the rule of law. This is something that is at the center of what we are doing in MENA, with a lot of headwinds, as you can imagine, but we are pushing on that, because at the end of the day, and I will finish with this, what has really plagued MENA for years now is this incredible gap between governance and governees, between the state and the citizen. The social contract that was established about 50 years ago is now broken, and there is a need to reinvent that social contract, and that would not be reinvented if we don't rethink the role of the state in the economy, and if we don't rethink the whole governance system and transparency system. Giving more voice to the people is at the center of it.
Thanks, Ferid. And over to Ceyla. You've had some good ideas about what needs to be done, but can you just focus on the finance issue? Because access to finance for many informal firms is very difficult, and that prevents them from growing to become larger firms. To what extent can financial development help improve productivity and resilience in the informal sector?
So many of the informal sector firms, farms, workers don't have access to formal finance because they are informal, and it's very hard to show what their transactions are and build credit history. So I think they mainly rely on supply chain finance, as well as informal channels through their families, or some of the informal remittance payments and so on and so forth. I think we do have an opportunity with digital financial services. It's not a panacea. It comes with huge risks, especially if financial capacity and learning doesn't come along with it. But it does have opportunity to provide low-cost microfinance to those that really need it, and using the information as they develop a transaction history to be able to access higher levels of finance, as we have seen in Kenya and some other countries, I think is really relevant and can be broadened to other countries.
Thanks, Ceyla. And finally, over to you, Cole. You serve as the director of the Africa Growth Initiative. Informality is obviously very prominent in Sub-Saharan Africa. So informal workers and firms in the region are often less productive than their formal counterparts. What kind of policies can help address the challenges of informality in Sub-Saharan Africa?
Yeah, I think in the region, as I listened to Ferid, I think some of the issues that he flags quite resonate, at least for the Sub-Saharan African region. And I think the book has a number of very compelling suggestions, including looking at places where institutions are weak, and also because the size of the informal sector, due to large and agricultural dependent economies, is even larger, I think, in Africa than in many instances. And it's also flagged low human capital. So trying to invest more human capital would be very helpful, but importantly to undertake regulatory and institutional reform to improve a bit the business environment and upholding legal and judicial system. So I agree with all these policy actions, and I think they'll be all helpful. But again, there's also, as the Ceyla and Ferid mentioned, a sentiment of a bit of a broken record in terms of the laundry list of these suggestions. I think where we've been missing so far has been how do we move from what we know we need to do to implementation. And I certainly echo off the Ceyla's sentiment that we have an opportunity here with the digital revolution that is ongoing. And I think it does provide the opportunity and the platform to be able to deliver and implement some of these policies at scale and with more greater efficiency. But again, let me emphasize that, as I mentioned earlier, that I see the critical role of formal sector job creations, particularly as these countries confront premature deindustrialization. Ferid mentioned how the Arab Spring was triggered by an informal worker who was harassed by the police. And that's what happens when there are no formal sector opportunities. And at Brookings, we've been thinking about this deeply and have undertaken a multi-year, multi-country study across Africa to look closely at how else can those countries generate large-scale formal sector opportunities. And we hope to have some results to share with the community sometime this year. And the final point I will make is that besides policy, I think, and very importantly, that there needs to be a change in the narrative about the informal sector. It is often portrayed intentionally or unintentionally as a nuisance, as the less useful part of the economy that is not paying its fair share of the taxes. But I think to many developing countries, even across Africa, the informal sector is the economy. The informal economy is the economy, and getting that narrative right will help build the trust that is needed between the authorities and actors in the informal sector. Trust that, in my view, is very necessary for successful formalization. Now, if you talk to an informal worker and you said the government is interested in formalizing you, it would be met with great suspicion. The question would be, why do you want to formalize me for? This business has been in my family for a generation, my grandfather to my father to me, and now you're showing up, you want to formalize me. What do you want to formalize me for? And I think that trust needs to be reestablished, that mutual respect between policymakers and actors in the formal sector. And I think there's this pandemic, the informal sector has been hit quite hard, but there's also COVID-related support to help economies rebuild. And I think it's a unique opportunity for a fresh start. And many firms in the informal sector would be willing to register to be able to benefit from some of that relief. And I think the government should use that opportunity to reset the relationship with the informal sector and begin building that trust so that formalization is viewed as the win-win arrangement that it should be.
Thank you. I like that. The informal sector is the economy. I think that's absolutely right in many of the countries. So I think we can have a very good takeaway from there. So thank you, Ceyla, Kul, and Ferid for your insights. We now have about, I think about 15 minutes for questions from our online audience. I'll start with those we've already received. And for those of you who would like to ask questions now, please post them in the chat section of the platform on which you are attending. So I have two questions that I can pose already. I think this question is for Ceyla or Ferid. What can governments do to avoid the growth of the informal sector during the COVID-19 crisis? And what can be done to help people in the informal sector? And then the second question is for Kul. Migrant workers often work outside the formal sector, and their potential for obtaining health and social protection or housing is often limited. How should policymakers in developing countries address this challenge? So first question over to Ceyla and Ferid, and then the second one to Kul.
So on what governments can do to avoid the growth of informal sector, great question, very difficult to answer. I think it will happen as some workers will be displaced, and especially non-tradable sectors, hospitality sectors, contact-intensive sectors are hit during the pandemic. And given the potential for providing support to keep these employees in and firms resilient, I think that unfortunately there will be a move to informal sector. So what can be done to help the informal sector and part of it to reformalize again is active labor market policy. Some of the issues that we discussed, access to finance through digital means, thinking very carefully about support to bring workers, to train them, but also bring firms back into, to the extent that they are viable, back into the workspace. But I think this is a very pertinent question because we will face insolvencies in the formal sector as well, and that's going to divert a lot of attention to, and we will also need to think, how do we make sure that, as Kul said very well, make sure that the informal sector, which is the economy in many countries, also gets the targeted support it needs to work in as much productive way as possible.
Ferid?
Yes, maybe a quick point. When I look at when I go to the countries I'm responsible for in a way, and when I talk to people on the ground, real people, they will tell you we are in the informal sector because for us to get into the formal sector, we have so many obstacles, so many problems that are created by the quote-unquote administration, so many ways to actually keep us in the informal sector that frankly, all of these are disincentives. You go to talk to people sitting on the street of Cairo or of Casablanca or even in Baghdad, in a dire situation, they will tell you exactly the same thing, because again of this overwhelming presence of the state with all of its tentacles into the society. So this is really one thing that we need to keep working around. Second issue, because of that, we need to make sure that we are not forgetting, these 40, 50, 60% of the population. And we need to make sure that we are targeting them when it comes to helping them through social safety nets and through cash transfer. Otherwise, we go and going back to what Brahima mentioned earlier, we go back to setting the groundwork for another explosion in the MENA region, and we are really not in need for that at this particular stage.
Cool. On the question on the second question.
Yes, I think on the it's true that many of the migrants tend to be trapped into the sort of informal sector in the shadows of the economies where they operate, and I think where they don't benefit from social safety net and their general contributions to the economy are usually undercounted. And I think this is just a failure of the immigration policy, and it needs to be viewed in that broader context, because the immigrants, by virtue of the fact that the immigrants are self-motivated and they bring a unique set of talents. And I think when the policies are not conducive to let them really live up to that full potential, it's not, the host country is not maximizing those opportunities. And we've seen instances where immigrants have been very well integrated into the economy, and they've been really drivers of innovation, drivers of job creation as well. And it has not only benefited the host country, but some studies, even coming out of some of my colleague, Danny Bahar Brookings, has shown that it's actually beneficial even to the host country, not just by way of remittances, but in terms of even knowledge transfer that is also helping also create opportunities for the source country. So again, I think it's a reflection really of the failure of immigration policy that needs to be reviewed so they stop operating in the shadow economy.
Thanks, thanks, Cole. I know Ferid has to leave for the board meeting, so thanks, Ferid. Let me thank you on behalf of everyone. Thanks for your insights from the ground.
Thank you very, very much. See you all soon.
See you soon. Let me then address the third question to Ceyla. Given the large size of the informal sector in developing economies, what can be done to allow these economies to benefit from financing and advances in technology? And then the fourth question for Cole. The pandemic has given the gig economy a boost. Does it bring opportunities or policy challenges? Ceyla?
So, yes, one issue that I wanted to mention also in the last question, and I will take the opportunity to mention now, something that really worries me, and the question was how to avoid the growth of informal sector going forward. And that's something that the World Bank has been working on, which is human capital, right? There was a lot of attention given to how to make sure that the education gap, the human capital, the poverty, education poverty can be addressed. And I think this is becoming a much bigger problem given COVID. So thinking through carefully how to support these countries. And we have done some studies. We published a report about just before the spring meetings, looking at the financing needs of developing economies, and especially countries where informal sector is very large. These needs are large. They are, and they have grown much larger given the COVID impact and potential scars from the COVID impact. So I think it will be very important for policymakers to really focus. I mean, of course, now everyone is looking at the health crisis, the immediate economic impact, and so on. And it really worries me that we are not looking and we're forgetting the human capital dimension of it. And I hope the World Bank continues to push, as it did before, on the very importance of this topic. Similarly, on digital financial services, as I mentioned before, this is an opportunity to provide low-cost financing at small amounts that can be built up. And this is particularly relevant for the informal sector, which doesn't have access to formal sources of finance. It's just so expensive for them, and they don't have the credit history to be able to access finance, and not just lending, but also insurance, also savings and other financial services that can be provided and tailored to them precisely because of the digital means and the possibility to update information as these informal firms and workers can be incorporated in the data systems by their transactions, which can allow them to access a finance even though they don't have collateral or formal information systems and registries. So it is a very important opportunity to really focus on the opportunities from digital at the same time managing the risks, because of course there are risks with digital as well. Thanks.
Cool.
Yes, I think I mentioned earlier that there was a trend that I was concerned about, which is the difficulty in creating large-scale formal sector job creation. I think the other trend is really the rise of the gig economy, and I think it is a very good question as to whether this is opportunity or challenges. I personally think that it is an opportunity because it is adapting to the evolving nature of work itself, and increasingly we're going to see more and more of gig type economy type jobs, and this will not just be a developing country issue. We'll also see that increasingly becoming a norm even in the advanced economies. And I think here we have a classic case of the economy evolving faster than the regulations. And policies need to be even more proactive now and intentional in ensuring that the jobs of the gig economy do not suffer from the same characteristics that make the informal sector more conducive to social problems such as development challenges that we mentioned earlier. And that would include making sure that the contribution to the economy is recognized and that they have a mechanism for getting access to insurance. They have a mechanism for also benefiting from social safety nets, etc. And I think if that's the case, then I think it would be a tremendous opportunity for the economies of the future.
Thank you, Ceyla and Cole, for those answers. Fortunately, we've come to the end of our really great discussion and panel. And let me just close with some concluding remarks. Apologies to those whose questions we could not answer. I think we have a few takeaways. At least I had a few takeaways. I think the data and the knowledge is very important in terms of understanding the who in the informal sector, so that the unseen becomes seen, and we understand better what were the sources of the informality, and therefore be able to design policies better. I think the broken record is there. We in a way kind of know already a lot of what can be done and what needs to be done. But how do we prioritize these actions? I think firstly on formal sector, yes, we need to increase the opportunities there, including identifying opportunities in the modern services sector, remove the distortions, address the structural weaknesses, issues of transparency and governance. And as Cole mentioned, the informal sector is the economy for many developing countries. So in making the informal sector or formalizing the informal sector is really a very long-term objective, which may take a long time. So how do we make sure that the informal sector is being productive? How do we build trust? How do we incentivize the informal sector to want to become more formalized? What are the issues there in the short term? I think it is about ensuring that we address the immediate impact on health and social issues, as well as human capital, as Ceyla mentioned. And then more broadly, I do think the skills development, the access to finance, and so on. And I do believe in the role of digital. The digital ID. This is part of the making the unseen being seen. Linking them first of all to the social and health programs that they need in the immediate emergency situation, and then building on that for skills and financing and bringing them to the market. So the digital ID and then the layers that you can link to it is, I think, an obvious key that I think at least at the bank we are working on, and I think this can be the opportunity for prioritizing action moving forward. So let me close there with a big thanks to Ceyla, to Cole, and also, of course, congratulate the Prospects Group and the two authors. We look forward to, I think, many more discussions based on the analysis that have come out from this, and hopefully be able to help countries prioritize the actions, policy actions they need to make sure that the informal sector is going to be a key to the recovery and not muted in the recovery. Thank you very much, everyone, and we'll see you at the next forum and next event. Bye-bye.